Trade war is escalating. At the G7 summit, Mr. Trump said, quote, "Very big things are happening with China," and praised the Chinese president just days after calling him an enemy of the United States.
According to a study conducted by the United Nations Conference on Trade and Development, or UNCTAD, the trade war between the United States and China could lead to a decline in global trade by $800 billion, which accounts for about 2% of global GDP. Welcome to our YouTube channel, where we delve into pressing global economic issues. In today's video, we will explore the trade war between the United States and China and its far-reaching implications for the global economy. Join us as we analyze the key aspects, consequences, and potential future scenarios surrounding this ongoing economic conflict. Part 1. Understanding the trade war.
Trade war back on.
Trade war.
Trade war, full-blown trade war.
In 2018, the United States, under the Trump administration, initiated a series of tariffs on various Chinese imports. The primary concerns were centered around intellectual property theft and unfair trade practices that disadvantaged American companies in the Chinese market. These initial tariffs imposed by the United States covered approximately $250 billion worth of Chinese imports. The affected sectors included industries such as technology, manufacturing, and agriculture. The objective was to address long-standing grievances related to forced technology transfers, lack of intellectual property protection, and market access barriers faced by American businesses in China. In response to the U.S. tariffs, China retaliated by imposing tariffs on around $110 billion worth of American goods. The Chinese tariffs targeted sectors such as agriculture, automobiles, and energy products. This escalation in trade tensions between the two economic powerhouses marked the beginning of a trade war that would have wide-ranging implications for global economics. The trade war quickly disrupted established global supply chains as both countries sought alternative trading partners to circumvent the tariffs. This shift in supply chains had significant implications for multinational corporations that heavily relied on China as a manufacturing hub. Companies faced increased costs, supply chain disruptions, and logistical challenges in finding new suppliers and markets. Moreover, the trade war unleashed a wave of uncertainty that rippled throughout businesses worldwide. Fluctuating trade policies and unpredictable market conditions made it exceedingly difficult for companies to devise long-term strategies and plan for the future. This uncertainty also impacted investment decisions, with businesses adopting a cautious approach amidst the unpredictable trade environment. Part 2. Economic implications. The trade war's impact on the global economy cannot be underestimated. Its immediate consequences were felt through the disruption of established global supply chains, as both countries sought alternative trading partners to evade the tariffs. This shift in supply chains presented significant challenges for multinational corporations, leading to increased costs and, in some cases, the relocation of manufacturing facilities to navigate the new trade landscape. Furthermore, studies conducted by the United Nations Conference on Trade and Development, UNCTAD, estimated that the trade war between the United States and China could lead to a decline in global trade by $800 billion, accounting for about 2% of global GDP. The Federal Reserve Bank of New York also projected that the trade war tariffs imposed by the United States in 2018 would result in a long-run reduction in real GDP of around 0.3%. The tariffs imposed by both the United States and China have resulted in higher prices for consumers, eroding their purchasing power and potentially dampening overall consumer spending. This impact on consumer prices has been observed in various sectors, including electronics, furniture, and automobiles. Financial markets have also been directly impacted by the trade war, with increased market volatility as investors keenly observe and react to every development. According to the International Monetary Fund, IMF, the trade war could reduce global GDP by 0.8% by 2020, with China and the United States being the most affected countries. The Organization for Economic Cooperation and Development, OECD, estimated that the trade war has off approximately 0.7% of global GDP by 2021. Part 3. Economic impact on industries. The trade war between the United States and China has had a profound impact on various industries, reshaping global supply chains and affecting businesses worldwide. Let's examine some of the key sectors that have been significantly affected by this economic conflict. 1. Technology industry. The technology sector has been at the forefront of the trade war, with both the United States and China imposing tariffs on tech-related goods. This has disrupted the global tech supply chain, affecting companies involved in the production and distribution of electronic components, semiconductors, and consumer electronics. The tariffs have led to increased costs, supply chain reconfiguration, and delayed product launches. According to the Semiconductor Industry Association, the trade war has resulted in reduced sales and profits for semiconductor companies, impacting their long-term growth prospects. 2. Manufacturing industry. The manufacturing sector, particularly industries heavily reliant on Chinese imports, has faced significant challenges. The imposition of tariffs has led to higher production costs, affecting industries such as automotive, machinery, and textiles. Many manufacturers have sought alternative suppliers outside China to mitigate the impact of tariffs. However, this shift in supply chains requires significant adjustments and investments, impacting profitability and productivity in the short term. 3. Agriculture industry. According to the American Farm Bureau Federation, U.S. agricultural exports to China declined by $15.8 billion from 2017 to 2018 due to the trade war. The tariffs imposed by China on U.S. soybeans resulted in a 50% drop in U.S. soybean exports to China in 2018. The trade war has also had a profound effect on the agricultural sector. China is a major market for American agricultural products, including soybeans, pork, and grains. The tariffs imposed by China on U.S. agricultural goods have significantly reduced exports and disrupted established trade patterns. American farmers have faced declining prices, excess supply, and financial hardships as a result. In response, the U.S. government implemented various aid programs to support farmers affected by the trade war. Part 4. Geopolitical consequences. Beyond its economic ramifications, the trade war has had far-reaching geopolitical consequences, straining the relationship between the United States and China. It has intensified the underlying rivalry between these two global superpowers, shaping the dynamics of international relations. Surveys conducted by the Pew Research Center have shown that the majority of people in several countries had an unfavorable view of both the United States and China due to the trade war, with negative perceptions increasing significantly. This shift in public opinion highlights the impact of the trade war on the image and reputation of both nations. Additionally, the trade war has led to increased competition for influence and economic partnerships in regions such as Southeast Asia and Africa, as countries seek to diversify their trade relationships. As a result, new alliances and regional trading blocs are being explored. For example, the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, signed in 2018, aims to promote free trade and investment in the Asia-Pacific region. Moreover, the trade war has prompted widespread discussions about the future of globalization itself. Countries around the world are reevaluating their trade policies and contemplating measures to safeguard their domestic industries. This reassessment of trade relationships has the potential to reshape global economic dynamics. Part 5. Global economic repercussions. The trade war between the United States and China has sent shockwaves throughout the global economy, affecting countries beyond the direct participants. Let's explore the broader implications of this trade conflict on a global scale. 1. Global supply chains. The trade war has disrupted established global supply chains as companies seek to diversify their sourcing and manufacturing locations. This has led to increased costs, logistical challenges, and uncertainties for businesses worldwide. As a result, multinational corporations have had to reassess their supply chain strategies and explore alternative markets, impacting economies beyond the United States and China. 2. Investor confidence in financial markets. The trade war has created significant volatility in financial markets as investors react to trade-related news and developments. Stock markets have experienced heightened fluctuations, affecting investor confidence and investment decisions. Uncertainty surrounding the trade war has led to increased risk aversion and a cautious approach by investors, impacting global capital flows and market stability. Part 5. Potential future scenarios. Let us now explore the potential future scenarios that could unfold as a result of the trade war. While the situation remains fluid, several possible outcomes exist. One plausible scenario involves a comprehensive trade agreement between the United States and China. Such an agreement would address the underlying issues and create a more stable and predictable trading environment. In January 2020, the United States and China signed a Phase 1 trade deal, which included provisions related to intellectual property protection, technology transfer, and agricultural purchases. Under the deal, China committed to purchasing an additional $200 billion worth of American goods and services over a 2-year period. However, progress on further trade negotiations has been slow, and both countries have continued to impose tariffs on each other's goods, indicating that a comprehensive resolution is yet to be reached. Another scenario could involve a prolonged trade war, with both countries maintaining their tariffs and trade restrictions, leading to continued uncertainty and potential economic repercussions. This scenario would perpetuate the disruptions in global supply chains, increase market volatility, and hinder global economic growth. It is also possible that the trade war could escalate further, with additional tariffs imposed on all bilateral trade. This escalation would intensify the economic and geopolitical tensions between the United States and China, with far-reaching implications for the global economy.